folks. Today we're going to talk about investment properties. I've had many recent conversations with friends and past clients about whether they should be buying investment property in this market. This is March 2021. This is a crazy hot spring market, and it is a seller's market with a lot of multiple bids and buyers losing bids over and over again. So is this the right time for you to jump into, an investment property? And the answer, of course, is not a universal yes or no. My answer always is it depends. Depends on where you're coming from. And while I've had all of these conversations individually, I figured I'd consolidate into my thoughts. And it is best explained if you are a first-time investor, an accidental investor, or a seasoned investor. These are my three categories. And I have different advice and different suggestions for what you can do depends on which category you belong to. There's never a right or a wrong answer. There is never a universally correct answer for everybody. It all depends on what your personal situation is. So let me first start with somebody who doesn't have any investment properties. You're living in your primary residence. Now you're wondering if it is the right time to buy. Well, but being a landlord and having an investment property is not easy. So first thing I tell people, if they haven't thought this through, is do a little research on this. I have a couple of blog articles as well. Are you okay with, having dealing with tenants and people moving in and out and maintaining a property? And do you understand what the break-even ratios are? What's a cap rate? How much are you going to be spending per month? And what does your rent need to be to cover that? And what's the rental rate? What's the rental market looking like in the area that you're considering? Have you even considered a location where you want to buy a rental investment property? I typically recommend buying something nearby so that you have it's easier to maintain. So there are all these things that you want to consider before you even jump into that, right? But the question here is now the right time to do it? Is the current market okay? Okay. So the depends part of it is, are you cash rich right now? Do you have a lot of cash sitting idle, which is not making any money for you? It's in the money market account, earning barely any interest. The stock market is very intimidating to you and you don't want to invest any more money in the stock market. Maybe all your eggs are in that basket and you'd rather diversify. Maybe you have a lot of equity in your current home. Maybe your current home is paid off and now you have an opportunity to pull the equity. There is a home equity line of credit that you can use and leverage that to make money. So there are a couple of words that I used here. One is diversify. Real estate investments are great to diversify. Do you have a little savings set aside for emergencies? Do you have some money in your retirement accounts? Those are some of the things that you can discuss with your financial planner and your tax advisor, right? So if you have credit card debt, maybe now is not the right time to do this. First, pay off that debt, right? If you barely have any equity, if you just bought your home and you have 5% equity in the home, just a little fluctuation in price is going to have you underwater. Maybe this is not the right time for you, right? But if you are secure in your current home and you do have a lot of equity that you have built up over time, or maybe even the home is paid off, or you have cash sitting because all of last year you never went on a vacation, you didn't go out and eat at restaurants, you did your own cooking. Well, you have a lot of cash sitting, which is not earning any money for you. So what the finance guys talk about is the opportunity cost of money. So here is your opportunity to do something with that money. You don't want to leave it under the mattress. And if you're one of those people, then maybe the investment is the right opportunity for you. What real estate investment allows you to do is diversify and then leverage. The way I use the word leverage is you don't have to have $200,000 to buy a $200,000 house. You only have to have 10% down or 20% down to be able to buy a $200,000 house. And the assumption is that that investment pays off in the long run over the next 30 years because it's a great time to lock in like a ridiculously low interest rates. The interest rates have never been lower before, right? So yes, they're creeping up a little, but we're still at 3%, which is an incredible rate to lock in. So yes, it's a great time to buy if that's the situation. Let me move on to the second category. The accidental investor. Please share for me, in the columns, in the comment section below, if you are one of those accidental investors. Did you inherit a property from your parents? Did you move from one property to the next and never sold that previous one? What have your experiences been like? So this is where I step back and say, so did you like being a landlord? How is that, investment property working for you? Is it easy to find tenants? Is it maintaining itself? What are your numbers looking like? What have you spent over the years on? What are your outflows and what are your inflows? As in, what rent are you collecting on it? Is it meeting your monthly expenses? Are you making a little over, or are you not quite breaking even? These are some of the questions you want to ask, right? Um, another another thing I ask my investor clients is, are you enjoying this? Like, is it a drag to take your lawnmower and go there and mow the lawn when you're in between tenants? Or are you okay with going there and fixing things, or are you just picking up the phone and calling somebody, and is it bothersome to do that? So you know yourself, you know who you are, and if this is not the right thing for you, maybe it is not the right time to invest in more properties. Like, just be honest with yourself and say, is this working out? Is this stressing you out? Every month, the way your finances are working, if your tenant is about 3 days late in making his monthly rental payment, is that stressing you out? Then maybe this is not the right time for you. But if that thing is on autopilot and you're doing great with that investment property, maybe now you figured it out and now is the time to buy another one, right? Yes, the prices are high, but the interest rates are low. And have you built a lot of equity in your homes again, in that investment property plus your current home? Home values are the highest that they have been for a long time, right? Forever, even. So now is a great time to apply for that home equity line of credit and lock in those high values and borrow as much as you can and then invest, right? I'm not a big fan of borrowing money to spend, but I will recommend borrowing money so that it can make more money for you. The borrowing money to spend part, only do it for a short period of time, only if you're desperate. I wouldn't borrow money to spend it. But if I'm borrowing money as from the HELOC and investing in another investment property, that's an opportunity to build another asset over the next few years. So that's a great win. So it doesn't matter if you're paying 5 or 10 or 15,000 more for your house right now, but now you're leveraging the 3% interest rate over the next 30 years to create another asset for yourself. So that's an opportunity right there. As we're talking about investment properties, I want to talk about a couple more things that I can throw into the mix here. One is the lenders see it as primary residence, second home or vacation home, and then 1 to 4 investment properties and 4+ investment properties. These are the broad categories, and there's a difference in how your loan is processed based on those categories. So that second home or that vacation home is another thing I wanted to bring up here. If you own your primary residence and you always wanted that home in Florida or in the Hilton Head, now's your time to start thinking about that. If you have a HELOC, if you have that line of credit, you have the down payment to put on the home over there, so you don't have to make the sale contingent upon the sale of your current home. You're not paying any interest on that line of credit till you actually start borrowing money. So all you're doing right now is having that opportunity to use it if you need it in the future. So I believe that folks who are not that hot into rental investments, that being that landlord was not very exciting for you, maybe this is the time to sell your investment property. This is the best price you're going to get, and then invest in your emotional purchase, the home by the beach or in the mountains, or wherever that you always wanted, close to your friends or close to your family, or going back to where you grew up. Those are some of the conversations that I've been having with a lot of buyers and sellers as well. Another caveat to this is it depends on where you live and where you're thinking of buying the property and what kind of property as well. So again, this is the conversation you want to have with a local realtor. I'm going to give you an example of Exton. Exton, the 19341 zip code, has recently, West Whiteland Township, has seen so many apartment buildings recently. There are so many apartment buildings that have cropped up, and on Nextdoor or on Facebook or any social media, you see a lot of the locals complaining. Yes, if you are one of them, feel free to show some love. Yes, we have all complained about the increase in traffic and all these apartment buildings coming up, and who's going to live here, and really, do we need so many? Well, we have a population growth in Chester County, we have an income growth in Chester County, we have way more buyers and tenants than we have housing to support them. So my assessment is, personally, all of those are going to be packed within no time. I mean, they're all in various stages of completion right now. They all need use and occupancy. Last year's COVID probably delayed things a little bit for those owners and investors. But now you have a lot of condo opportunities, rental opportunities in Exton. So if your investment property in Exton happens to be a condo, well, you're facing competition. You want an investment property that is supporting pets and children, something with a backyard. That is something that those condos don't offer. And maybe that's what you want to do. So there is these qualitative decisions as well, along with the finance and the numbers decisions that you want to make with your realtor. And it all depends on location, it depends on timing, it depends on what's going on with your finances. A third category of people is what I call a seasoned investor. So if you are a seasoned investor, you know enough about this. I'm not sure I can teach you anymore, right? You already figured out your break-evens, your cap rates. You've already figured out that, yes, every fourth or fifth tenant is probably somebody that you're going to have to deal with, who is going to be issues, not paying rent on time, not taking good care of the property. I mean, if you are one of those landlords that have had excellent tenants who never move out, who always maintain the property so well, who pay on time, well, more power to you. That doesn't happen to everybody, right? Everybody else is like somewhere in between there. So you figured these out. Now you have a portfolio of investment properties. I'm going to ask you to reevaluate those portfolios. Out of the 5 or 6 investment properties that you have, maybe one is a star property that you don't want to touch. Maybe 3 of them are star properties, but the other 2 are maybe duds. Some of them are so hard to find tenants. You always have high vacancy rates. Or there is a property that you have in your portfolio that is just requiring too much maintenance. You're going to have to put a lot more money into that home in the upcoming 3 to 4 years. Maybe now's the time to get rid of that. Maybe it's the time to rearrange your portfolio and say, okay, I want to keep the stars and get rid of the duds. It's a great time to sell, right? And again, you realign your portfolio and see how much equity do you have that you can leverage, and is it a time to buy yet another property, Or you might say, I don't want 3 properties where I'm making $600 and $800 in rent. I'd rather have one which is giving me $2,000 in rent, much more easier to manage than managing 3 different properties. Whatever your reason, time to reassess your portfolio. There are some that you made an investment in, that condo that you invested in, which was your first purchase. You weren't very careful with that purchase, and it is not growing. The value is not growing. That neighborhood turned out to be not a great neighborhood after all. Do you really want to hold on to it, right? Maybe now is the time to sell it because home prices are high in general. Sell it and reassess your portfolio. And if you have, money that you can leverage, maybe you can buy somewhere else, which is a better investment opportunity. You've already figured out which are the better opportunities by now. So this is the leveraged investor. This is a seasoned investor. Another thought about seasoned investors, the 1031 exchange. You've probably already heard about it. For those of you who don't know, 1031 exchange is about selling your investment property and buying another investment property. You're investing the proceeds from the sale of the first one into the second one. And the way you do it is you do it in a certain way that you don't have to pay capital gains on your property. So if you have a lot of capital gains on your investment property, now is the time to do a 1031 exchange and buy your next one and roll those profits into the next one. Now, there are very strict rules about 1031 exchanges. If you've done this successfully, please share your experiences. If you haven't done it or if you don't know what it is, I'm happy to, give me a call. I'm happy to explain further, right? So you can take an asset which was $200,000 where you had maybe a lot of equity, and now you're going to make it into a $500,000 asset in 20, 30 years. That 200K property would have never appreciated all the way to 500 ever, right? So if you're going to leave it for your children, the 200 will maybe grow to 250 or maybe max 300 over the years, right? But now you're jumping from a 200K property by putting in, having your tenant now pay into a bigger investment property, maybe a multi-level, maybe a multi-unit building. and now you've got an opportunity to have a much more higher value asset. There are some that I had conversations with recently who are looking to retire. You own these investment properties for a long time and you're done. You're done. You don't want to deal with it anymore. And you're like, my kids are not going to take care of these. I want to wrap up my portfolios and, get the cash out and be done. Well, it's a great time to sell then, because my advice to you would be, great hot market, sell your property. So at the same time, for every type of investor, and depending on where that investor is placed, I have different advice for you. I hope this video made sense. If you have any questions, please share them with me and I'll be delighted to answer. Share your experiences in the comment section below and let me know if you'd like to learn more about any one of these specific things that I talked about today, or share your experiences. I would love to learn from you. My other followers would love to learn from your experience as well. So please share in your experiences as investment properties. And I hope I answered that question for you. Is this a good time to invest in real estate? Take care.